Hey BMFers, welcome back to Be a BMF with Your Taxes, Episode 3. Today's episode is going to be a fun one, discussing a topic that comes up all the time when I'm talking with new prospects. It goes a little like this. Hey, BMF, my current CPA says I should make the S election and become an S-Corp. Can you help me with that? I usually respond, potentially. Have they ran an analysis to show you the overall tax savings yet? They respond, no. But they said I will save money on self-employment taxes. Never make an S election if an analysis hasn't been done and it's only on the basis of saving on self-employment taxes. If your accountant suggests this and doesn't show you an analysis, my advice to you is run. In this episode, I'm going to show you a calculation I would run for a single member LLC and then as an S-Corp and show you what the true tax savings are and the other considerations before making the decision. I do want to clarify before we get into it, that this is a very simple example and doesn't take into account every possible consideration one might take while doing an actual analysis. However, it will give you a good idea of what to be asking your accountant, unless it's me, before making the S election. Let's get into it.
All right, everybody, let's get into it. We're going to be looking at BMF tax, and we're going to start with the single member LLC analysis. So let's assume that gross income for the year is $150,000. Thank you, everybody, for your support. It's much appreciated. And then let's also assume the following expenses: software of $15,000, rent of $12,000, dues of $2,500, and utilities of $1,500. That gives us a net income of $119,000. Not too shabby, I'd say. All right, now let's look at the self-employment taxes on that $119,000. The first thing to recognize is you aren't taxed on all $119,000 of it. The IRS is generous enough, as if the IRS can ever be generous, but they do say if you had been an S-Corp or another type of entity, you would have gotten a deduction for the employer portion of the payroll taxes. So that's why they reduce 100% to 92.35, because the employer piece would have been 7.65%. So if we hop down here, you can see the two Social Securities, one for employer, one for employee, and the same with Medicare. Social Security is taxed at 6.2% and Medicare is taxed at 1.45%. So you can see what those totals end up being. It's $68.14 for the employer and employee part of Social Security, and it's $1,594 for the Medicare portion of it, the employer and employee. So you have total self-employment tax of $16,814. Now that is a tax that is on top of the income tax that you have to pay on the $119,000. The IRS also gives you a 1/2 self-employment tax deduction as well that reduces your income. So if we hop up here to income taxes, you can see adjusted gross income. Now normally on a 1040 you would have all the other lines, but here I'm just assuming that this is my only source of income, so I hopped straight to adjusted gross income. Here's that 1/2 SE tax deduction I was talking about, which agrees to this amount. And then I'm also assuming that I'm single and I'm taking the standard deduction, so no itemization here. That gives me pre-QBI deduction taxable income of $96,743. Now that number does come into play as we jump over here to the QBI deduction. So the QBI deduction is the lesser of 20% of your QBI income or 20% of your pre-QBI deduction taxable income. In this case, with that $96,743, that ends up being $19,349, which is less than what the deduction would be if we took 20% of QBI. So we're limited to this $19,349. So you can see that deduction here. With that deduction, it brings our taxable income down to $77,394. And on that, tax would be $12,334. So if we hop down here, we see the net cash outflow from the self-employment tax and federal income tax, the total being $29,148. Next, we'll get into the S-Corp analysis and see how that changes things. Okay, let's get into the S-Corp analysis. As you can see, we're still looking at BMF tax. We still have the same gross income of $150,000 and the same software, rent, dues, and utilities expenses. But as you can see, there's now a whole bunch of other expense accounts that weren't present on the single member LLC analysis. That's because with an S-Corp, you have to pay what the IRS calls reasonable compensation. They don't define what that means. You basically have to decide what is a reasonable compensation for your profession, your area, things like that. For this example, I said $70,000 was a reasonable compensation to pay myself. Now, kind of how we talked about on the single member LLC, there's the employer portion of payroll taxes that on the SMLLC, you pay through your 1040, but with an S-Corp, you're paying it through the business. So that's why you have the employer portion of Social Security and Medicare here. In this case, the Social Security is $4,340, which is the 6.2% of 70,000, and the employer Medicare is $1,015, which is the 1.45% of the 70,000. Now, also with an S-Corp, there's a separate tax filing requirement, the 1120S, and that's going to come with an additional tax prep fee that you're going to have to pay an accountant to prepare. I estimated that to be about $1,250. It could be more. You could find someone that would do it for less, but I'd say that's a fair price for this small of a return. You're also going to have to pay someone to do the payroll administration piece of it. Now, whether that's you have someone in-house that does it, your CPA does it, you hire a company like ADP, there's going to be an additional fee with that. Usually averages around $125 a month. So that's where this $1,500 came up. So that leaves you with net income of $40,895. So a lot less than the $119,000 we were dealing with on the single member LLC. So as we come down here, you'll see self-employment taxes, but there's no numbers. Why? That's because S-Corps aren't subject to self-employment. That gets withheld on your W-2. So on the W-2 analysis, again, I assumed $70,000 of wages, and for federal tax withholding purposes, I assumed a 15% amount was withheld, which is where this $10,500 of federal tax withholding came up. Down here, we have the employee Social Security withheld, which is going to be the same as the employer amount because it's the same percentage, and same with the employee Medicare. And if you remember from a previous video when we discussed the W-2, you would know that these are box 2, 4, and 6. So if we hop down here, we're going to look at the income taxes now. I now have wages on there, which I didn't previously have as a single member LLC because you can't pay yourself wages on a single member LLC. So you have the $70,000 from there, and then you get passed through a K-1 from the S-Corp. And in this case, it's that $40,895. So for this example, I have adjusted gross income of $110,895. There's no 1/2 SE tax deduction this time because we didn't pay self-employment taxes. It's the same standard deduction of $13,850. And we have pre-QBI taxable income of $97,045. So let's see how the QBI deduction changes here versus the single member LLC. So here we have QBI income of $40,895. We didn't have to back out the self-employment tax like we did for the single member LLC. So our QBI income times 20% is $8,179. If we did our income limitation, it'd be $19,409. So in this example, our QBI as an S-Corp is $8,179. If you remember on the single member LLC example, the QBI deduction was $19,349. So about $11,000 decrease in that deduction because of the income. So I did the same type of net cash flow outflow for you to take a look at. We still have federal tax withholding of $10,500. You still have the employer piece of Social Security and Medicare. You have the employee piece of Social Security and Medicare. And then you have your balance owed on your 1040. And that's essentially, you had tax of $14,858 on your taxable income, and you had $10,500 withheld, meaning you still owed an additional $4,358. You also had the tax prep fees, which weren't present on the single member LLC, as well as the payroll administration. So if we come here, I did a comparison of the total employment taxes you paid for an S-Corp versus a single member LLC. As you can see, you do pay less in self-employment taxes, payroll taxes, whatever you want to call them, as an S-Corp. Like, accountants aren't wrong when they say you pay less in payroll taxes, self-employment taxes. You absolutely do. You could see as an S-Corp, you save $6,100 in my example for being an S-Corp. And you can see from a net cash outflow perspective, you're going to save $830 as an S-Corp. So you might be saying to yourself, that's great. I'm going to save $830, like S-Corp, no brainer. But the other things you have to consider when you're looking at this is, I didn't factor in, now you're an S-Corp. There's stricter requirements. You can lose that S election, which comes with all kinds of issues in and of itself. So maybe you're like, I want to pay for bookkeeping now. That's an additional expense. And now maybe that you're an S-Corp, you want to talk more with your accountant and you want to do more planning and things of that nature. That's going to come with an additional expense. So that $830 is going to get eaten up pretty quickly, and it might not be worth it. So something to talk about with your accountant is just looking through all of these different factors and seeing if it even makes sense to be an S-Corp, even though you have this $830. It doesn't even take into consideration the time implement. Running payroll it's not hard, but it's not an easy task by any stretch. It's very time consuming. It comes with additional payroll tax returns. It's a burden. So even if you didn't factor in the bookkeeping expense or planning expense, you still have the additional time. So the question then becomes, is this $830 of savings worth an additional maybe 30 to 40 hours worth of work? That is a conversation you need to have with your accountant and yourself to see if it makes sense for you given your own personal tax situation. So is everyone still with me? That was a simple example of what an analysis should look like when deciding whether or not making the S election is right for you. There are a lot of other factors that can play into it, and that's why it's important that your accountant runs an analysis for you based on your specific tax situation before making the jump to S-Corp Kingdom. Remember, if the only justification given to you to make the election is you'll save money on SE taxes, make sure you're talking to someone else. We're another step closer to being a BMF with your taxes, and I hope to see you again for the next episode. Thanks for watching, and if you have any questions, please reach out to me at brandon@bmftax.com or visit my website, bmftax.com, and set up an appointment with me today. Have a good one.